Going to take a look at the markets as we usually do at this time of the day. We're going to take a look at the euro, Bitcoin, gold, crude oil, and the DAX. If you are interested in other markets, then we do have client-only webinars on the premium edition. Right now we're doing them once a week on Wednesday, but we should hopefully ramp these up eventually to be able to host these at least 2 times a week. Now, before we start, as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk that we'll lose all of our invested money. And if you're new to any of this and don't fully understand the risks, then do click on risk disclosure down here. The risks of trading doesn't come as a major surprise to you. Now, let me just load the actual market that we're going to watch, and then we're going to get going. There we go. So good. So let's just begin here. Let's begin with the price of the euro versus the USD. So over the last few days, we had good success with the euro. So if you've been following me, you know that we said that traders could potentially look to sell here around 1830-ish. For this to head down, and the market did nicely move down once for a return of about 100 pip, and then it moved all the way up, and we had another push to the downside for 95 pip. Now the market is moving to the upside today, and I suspect it could go to maybe 1780, maybe even a little bit higher, maybe 118. But as long as you trade below 118.30, which is this high here created on the 17th of November, I'm gonna assume that as they did here and here and here, the market is gonna try to reverse and move down lower. Here, what this also makes sense is that here your risk is about 50 pip, and if we go down to the actual low, then the potential gain is 68 pip. But if we go all the way down to these sets of highs here, but also the slow here from the 6th of October, we're looking up for a gain of about 105 pip. So the idea here is very straightforward from a risk reward ratio perspective. Risk 50, make potentially up to 100. If we do that in the long run, then we don't actually even have to be right all the time. It's enough to, even if we're right 50% of the time, you'll be ahead. So that's why I remain bearish. Now obviously we need to have a contingency plan, like what if this doesn't hold? Well, if the 118.30 level doesn't hold, then I suspect this could go up to 118.62 and then potentially lower. And then if we actually clear this high here, which is 1862, then I suspect this market could potentially rally all the way up to 1950, which is this level up here, which is more of a psychological level. And then you have the actual high and resistance level, which is the 120 level. So in other words, take out 1866 and this market could be trading towards 120. So it's an important level to keep an eye on. And why am I bearish in general? Well, because we have the short-term downtrend, and you have creating these higher, lower and lower highs across this chart since the 7th of September. And that is the euro versus the USD. Let's take a look at the next market, which is the price of Bitcoin. So the price of Bitcoin here is bullish, and I'm bullish above 74.14, and my idea was to go long on a dip. We did have a dip initially, but we didn't necessarily go all the way down to the levels I showed you guys. And then yesterday we adjusted this up higher to 78, 72, but then again we moved up higher, but we didn't actually touch the levels I wanted to see. Now going forward here, I'm gonna be bullish, and I am, to be honest, I'm a bit reluctant to reduce the stop level. No, the market could easily move down here to these levels. There will be an 8% decline. If we take out the low, it's gonna be a 10% decline. So it's not impossible for the market to do this in a day. All kind of depends on the news. So I'm gonna make some little adjustments, but not much. Um, and I suspect traders, if they're not already long, pretty much from 7,900, they're gonna look most likely to turn long, and price should really stabilize between 7,900 and 7,600 or so. So if it pulls back, I think traders are gonna look to go long. Now, at least in the short term for today, we can use the pivot point indicator. So the pivot point indicator tells us that this market could, without any major issues, potentially rally to the R2 level, which is at 86.59, 86.58 ish. So it could take out this level and then just move up higher. But as you can see here, it's kind of stuck in this sort of sluggish uptrend, which makes perfect sense because the market did actually bottom out here and it's a little bit overbought. So again, to summarize, bullish, take out the high, can go up to 56.58, but my preference because of the current market conditions is to buy it on a dip. Here's the price of gold, which unfortunately is just trading sideways. There's not too much to do. Traders are keeping an eye on this level, which is 12.69, and then you have another support level here, which is 12.63. Then you have this high level, resistance level, which is resistance, and that is 12.89. And then you have another resistance level up here, which is the 12.97 high. And the price is stuck within this range. We can't actually say what's going to happen. And the market did try to move up higher, and we had a little bit of an uptrend, but that actually failed. So I think this is going to remain trading sideways for a little bit longer, and I think we just need to wait for either a bearish break, take us down, if the alternative, we move up here and then suddenly start to trade higher, and then we just look to buy a dip. Here's the German DAX, and here's a setup that we talked about yesterday. We said that on a break to this high, which is 13,111, this market would turn bullish and push higher. It moved up higher. It moved up to 13,215, which is this high here created on the 10th of this month. And right now what you're seeing is a bit of a pullback. Now the trend will remain bullish, and I suspect this could go down a little bit more. Worst case, it retests the breakout level and maybe touches the S1 level of today. I think fib wise, this would be the first fib level, if not 50. Yeah, the first fib level, which is 13,074. So it is fully natural for a market to come down to the first fib. So I'm anticipating the following. Again, I'm bullish from the break here yesterday. So some traders are already positioned because you can see the market moved up higher. And this market, if it comes down, I think traders are going to buy again. But it could obviously just shoot up higher. And traders that are already long from here, as you can see, somebody booked profits here, otherwise we wouldn't have that pullback. But there are also people that are keeping this for a retest of 13,342, which is this level up here. So again, I want to be bullish, and if it comes down, I think traders most likely going to add to their long exposure. You have as well the break to the upside here, but it's all bullish throughout as long as trade above 12,850. Here's crude oil, and look at this beauty, a real beauty. In fact, EURUSD was a beauty as well, Bitcoin and all these, but this is a real beauty. I don't know if you follow me here. If you don't, you should check in here every day at 9 a.m. London time. Some of you guys as well know me from Londinium Effects, where we do the same thing, but we not do the same thing. We actually look at more markets, but we actually have a price tag on that webinar. Anyway, real beauty here. We talked about going long from 55.94. And this market is now up with 3.83% or 213 pip. You're probably reading on the news today that this is, new monthly high, and you might think it's time to go long, but it's not. It was actually here and already here, which are setups we discussed in the past as well. So here I would definitely book profits if you haven't done so already. The new key level is 55.70, which is this low down here, and I am anticipating this to move up higher following a pullback. So we can use a fib from this low to this high, and as I said, it's fully natural for the market to actually reach the first fib. As well, when I'm looking at crude oil, I do like to get involved around the 4-day EMA, which is right now at 57.09. As well, if you just look at the pivot point in the system, we're above the R2, so the market should not really be trading at these levels. So on a little pullback to 57.09 or so, I suspect this could head up higher. Alright guys, that concludes today's market update. Don't forget to check out what we have on Trade Captain. We have the economic calendar, we have the different news as well. You know what's going on in the markets. The morning update is one of the most popular things we do here. Nice little summary of what's going on. So when you look at this in the early morning, you know exactly what happened overnight, and you know as well what people are looking forward to today. We have as well this economic calendar, which is actually really great. It's actually much faster than the ones you'll find on other websites. Actually, yeah, from the two biggest websites, it's pretty much faster than these two. Updates immediately, more or less, and you don't have to be reloading the page as you will do in, say, for example, well, you know the names of the big websites. As well, check this out. So we have a webinar coming up. So if you are a little bit lost, you know, you don't really know what Bitcoin is and blockchain, then we have this webinar coming up on November 23rd, which is tomorrow midday. We have had a huge amount of people signing up to this one. So it's an intro to Bitcoin trading and blockchain. So we're going to discuss about how Bitcoin is made up, pros and cons of all of this, and as well talk a little bit about trading Bitcoin via CFDs or spread betting. Okay, guys, thank you so much for joining me, and tune in here tomorrow at the live trading room, same time. If you're watching this on YouTube, don't forget to subscribe. Thank you.